Tesla stock today was down 1.41% in regular trading. Currently, at the time of recording this video, you are up 0.03% in after hours. The biggest catalyst of this week is Nvidia earnings, and I will start off this video with sharing with you a clip from CNBC today and Dan Niles, what he thinks Nvidia is going to report. And actually, he just gave us a pretty big warning about Nvidia. Dan Niles basically said there that no matter what Nvidia reports, in all reality, it might not be enough for the stock to do better from here. And that's because Nvidia is trading it in the $950 range. It's got lofty expectations, and that's bad in the short term, right? That's a potential negative for stocks in the short term. But when you look out to maybe the start of 2025 or the next coming quarters, there could be an inventory glut. There could be a slowdown of ordering. And just imagine that. If you go from 26 or $28 billion of revenue down to 20 again, that would not be good for Nvidia, the AI trade, or likely the markets. Now, the markets are forward-looking, but I don't know if they're going to be that forward-looking and trying to forecast a slowdown of ordering from Nvidia. Clearly, if Nvidia says something along those lines, then the markets will react to that. But over the next 6 months or so, there could be problems in the AI trade.
For the year to date, recovering ground from that April pullback. But the biggest test, of course, might come Wednesday when Nvidia reports Q1 results. Stock bouncing off a slew of price target increases today. Here to give us his read on the tech trade is Niles Investment Management founder and portfolio manager Dan Niles. Dan, great to have you. Interesting, provocative thoughts about Nvidia on X this morning. You do think huge beat and raise, but maybe the pricing adjustment is more muted?
Yeah, I think you've got two things obviously balancing out. The stock's up over 90% year to date, obviously up over 500% since the end of 2022. And everybody on the planet knows there's a huge beat and raise coming. And so I think that's the negative in the sense that expectations are sky high. The positive is, believe it or not, the stock is trading 15% below its 5-year average on a PE basis. And so that's why my thoughts are you get a slight move up in the stock when they report, because it is actually historically cheap on a price to earnings basis.
The other thing you point out longer term is you wouldn't be surprised to see multiple drawdowns of 25, 35% over the coming years. What does that say about its tenure as sort of the king of this market?
Well, I think if you go back, one of the things I try to focus on is, do we have an analogy for this period of AI infrastructure build? And of course we do. It's called the internet build out that happened in the mid-90s. And if you go back and you look at the king of the internet build out, if you want, Cisco, which became the most valuable company in the world in 2000 for a period of time, that stock had multiple drawdowns of 25 to 35%. It was down 26% in late 95, down 38% in 97, and down 34% in 1998. The stock went up 4,000%, though, from the end of 94 till its ultimate peak in 2000. And so with Nvidia, you should expect to see the same kind of thing, because I think anybody who's really familiar with semiconductors completely realizes there's been double and triple ordering this whole time. And so the question becomes, when do you go through a period of a digestion before you start the next buildup? And because you've seen lead times come down from a year, which means you order a chip today, you can only get it a year from now. That's now gone down to 3 months. At a certain point, and I think this happens after their latest generation chip called Blackwell comes out, once customers get that chip, then they can go ahead and figure out, okay, we double and triple ordered, how much do we need? I think that digestion phase comes in the early part of next year before we start the next build again, because we're still really early in the AI build. It's only been, a little over a year since we heard about this thing called ChatGPT and OpenAI.
And then what? You think the party comes to an end for Nvidia stock?
No, I think the revenues will go up 3 to 4x from current levels over the next 3 to 4 years. And I think the stock goes with it because, you go back and you look at Cisco and the internet build out. A lot of the companies that were driving that were unprofitable companies that were raising debt to be able to fund that build out. You look at today for the AI build out, well, who's really driving that? It's the most profitable companies on the planet. It's Microsoft, it's Google, it's Meta, and they're driving this. So the odds of this continuing to proliferate over the next 3-4 years is high. I'm just saying that with the lead times having come in, don't think that this is a straight stair step up, because it wasn't for the internet either.
Now, Tom Lee, legendary investor at this point, said this about the markets and what could happen if Nvidia does beat on earnings. And this could be a huge positive for Tesla and for small caps and interest rate sensitive stocks. Really, the areas of the markets that have not been participating as much in this latest market rally.
Nvidia on Wednesday. If they come in a little weak, the stock's been weak, so it seems like the market is ratcheting down some of the expectations. So give us the scenarios, Tom, if Nvidia meets or, misses or meets or has a giant beat. What do you think is the implication for the macro market?
Well, it's going to obviously be a disappointment and a negative shock if Nvidia misses expectations. And, they are very lofty expectations. I would think investors are going to be nervous, but ultimately it would be I think a prelude to a market broadening, because investors who own a lot of Nvidia might want to look for other stocks that are starting to show promise. If Nvidia beats expectations, because I'm assuming you're going to ask me that, I think it's going to pull money off the sidelines. And I think, again, it probably helps propel a broadening of this market rally. I mean, I think there have been other groups starting to participate, like energy materials this week.
Yeah.
But it would be better to see a beat than a miss.
That's what everyone's waiting for this week. It's all about Nvidia, and Nvidia could cause a 5 to 10% swing in the S&P and the Nasdaq just based on what they have to say, specifically forward-looking guidance and what the demand picture looks like for AI. The way I look at Nvidia is simple. If Nvidia sells off before earnings, it'll likely go higher after earnings. If Nvidia goes higher into earnings, it'll likely sell off after earnings, minus any really bad or really good new developments. Now, I think Tesla stock, specifically speaking about Tesla, sold off today was because that wholesale number out of China came in again weaker than the last month, which is really just a weakening streak that you have seen for November. This is causing some fears out there that maybe Tesla's business is slowing down further. I don't necessarily think that's the case, again, because even just like 2 weeks ago, it was announced that China would start selling more vehicles made in China. Okay, so less wholesale, less exporting is going to take place. And I don't think that's exactly a great barometer of judging the entire Tesla business. But then again, rates are obviously too high. They are unaffordable. So there is some weakness out there. Now, again, I do think Nvidia is probably going to come in line with expectations. I think the guidance is probably going to be in line with expectations. And you most likely do get a broadening out of our markets. You probably do get a stock like Tesla that can start to see some more capital allocation to it. Think about it like this. If Nvidia is not just beating and raising by stupidly high degrees, then some of that money can start to go elsewhere into other areas of the markets. If you don't have to own Nvidia right now, if that's not the logic or the mindset, you can start to own other stocks, maybe some stocks that will benefit from AI, maybe some stocks that are totally adjacent to AI. I think you could see a broadening out of our markets here relatively soon. And I think this week could be a very good week for Tesla stock, specifically if Nvidia meets expectations. Coming tomorrow, we will have quite a few different Fed speakers, as well as some inflation data out of Canada. 8:30 in the morning, you will get that inflation data. You're going to get month over month. You're going to get year over year, core as well as headline. Obviously, the US and Canada are different, but we do tend to have similar economies when it comes down to it. And due to our proximity to Canada, I'm in Michigan, so they're literally just like over the border, like 50 miles, 100 miles away, and you could be in Canada. So it can be important to us, to our markets in the US, but not always. So something to be watching for. But starting off at 9 o'clock in the morning, Fed Barkin, Fed Waller, Fed Williams, Fed Bostic will all be speaking, as well as Fed Barr that speaks around noon. You do have some oil data coming out that will not be that important. It could move oil, which could move our markets, but I'm not expecting it. It will. And then tomorrow after hours, you have Fed Bostic, Fed Collins, and Fed Mester at 7 p.m. Tomorrow pre-market, you have Macy's, Lowe's, AutoZone that report earnings, Toll Brothers Tuesday pre-market, Target, TJX, Analog Devices Wednesday pre-market, and then Nvidia, Snowflake, and Elf for the big day Wednesday in after hours. And it seems like Kim Kardashian really likes the Cybertruck. She's purchased another Cybertruck. This one is all matte black interior, exterior, and dark tinted windows. Here today, you had 40 different institutional trades totaling $3.98 million with a positive order value of 70%. So the option activity today was quite bullish. Here you can see a lot of options positioning is calls for the 200 to 215 strike expiring between June 21st and August 16th. Now, June 13th, you're going to have your big catalyst. Don't even need to really say that, but that's the Tesla shareholder meeting. Around June 21st, you're going to have Tesla's earnings. Coming July 31st, you could get your first cut from the Fed. That's tentative. We'll have to see how the data comes out, how the economy evolves. I believe we will get the first cut July 31st, though. And then on August 8th, you're going to have your robo-taxi day. So judging off of this option activity, someone believes that Tesla stock can rally big time by August. I mean, you're pushing, with the break even on these 215 calls of $5.55, that's the premium they paid for this position. They're targeting $220 per share by August 16th. If I were to sit here and tell you that Tesla stock would be $220 per share by August, I think everyone would go out and buy as many shares of Tesla as they possibly could. And that's why I continue to buy as many shares as I possibly can. Because, as long as Nvidia doesn't wet the bed and give us bad numbers or bad guidance, as long as the economy continues to do okay, as long as inflation does not revamp higher again, then I think there's no reason why Tesla would not have a strong summer, especially as we get closer to actually getting that first cut from the Fed. So that's my opinion. Now, again, like I said in the last video, on a technical basis, we have support around the 20-day moving average. If things do get bad, tomorrow, the day after, Nvidia earnings, you want to watch that 50-day moving average around 170, 171. If things get really bad, then you're going to fall down to about 161. Okay, 161, 160 or so, you're going to find support there. If indeed things are good, as I expect they will probably be, again, I'm not expecting any kind of stellar report from Nvidia or stellar guidance. But I'm not expecting a disaster either at the same time. And even if Nvidia does sell down on a meet on earnings or a meet on guidance, I think that could actually be, again, really positive for other areas of the markets. Could bring more capital into an area of the markets like Tesla, for an example. If you get above your trend line here, which has proven to be resistance plenty of times in the past, which is at about 181, almost 182 now. As we go through time, this trend line gets higher. You're going to find resistance there. If you get above that, your next stop's 188. That is exactly where your 100-day moving average is as well. So if you get above 188 in that 100-day moving average, then you set yourself up for larger upside into the 200s. The 200-day moving average is currently at $215 per share. Assuming it stays there for a couple of days or weeks or whatnot, I'm sure a couple weeks from now, your 200-day moving average is going to be closer to about 205 or so. You get above that level, then you set yourself up for a much larger run. Your next level of resistance, if you get above, let's say 205 or so by June or July, your next level of resistance is going to be this trend line around 215. And just forwardly speaking, looking out, I mean, if you get above that, then you're setting yourself up for a huge run well into the 200s. So I think June, July looks pretty optimistic for Tesla, not to mention August and the Robotaxi event on August 8th. That could be, oh man, a great period for Tesla. Really, June through August should be the time in which you want to own as many shares of Tesla as possible. So let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.